Stop what you're doing right now. Pull out your phone, open your gas app, or just think about the last time you filled up your tank. Gas in the United States is now averaging over $4 a gallon. Energy costs jumped 10.9% in a single month. Gasoline alone surged 21.2%. That's not a headline. That's money leaving your pocket every single week. And most people think this is about a war in the Middle East. It's not. It's about a trap. It's walked right into it. Here's what no analyst on cable news will tell you. Iran never needed to win this war. Think about that for a second. Iran's military is outmatched. Its economy was already under enormous pressure. Sanctions, protests, a collapsing rial, and inflation exceeding 40% heading into 2025. By every conventional measure, Iran loses this conflict. But here's the game theory question they won't ask you on TV. What if losing Iran burns, so does the global energy system? And in that fire, something much bigger begins to shift. Let me break this down into 3 layers. 3 triggers. Each one hits your life differently. Iran closed the Strait of Hormuz in early March 2026, a waterway that carries 20% of global oil supplies and significant volumes of liquefied natural gas. 20%. The International Energy Agency didn't call this a disruption. They called it the greatest global challenge in history. Now, here's what that means in real terms. Oil doesn't just power your car. Oil powers the truck that delivers your groceries, the factory that makes your medicine, the plane that carries the components for your phone. As one financial analyst at Bankrate put it, unlike tariffs, which took months to filter into prices, oil price increases are immediate. They hit gasoline, shipping, airline tickets, and every product with oil-based inputs, all at once. This isn't a gas pump problem. This is a cost of living restructuring. Now we move from energy to money, because this is where it gets truly dangerous. The Federal Reserve is facing a complex dilemma. Maintain a restrictive posture to contain inflationary pressures from the energy shock, or ease policy to prevent a growth slowdown. In plain English, they can fight inflation or they can fight recession. They cannot do both. The CPI for March is expected to show in stagflation, and the last time the world saw it was the 1970s oil crisis. We'll come back to that parallel in a moment. This is the layer that almost nobody is discussing. Iran knew it couldn't destroy the US military, but it didn't need to. It needed to demonstrate one thing to every country watching, Russia, China, Saudi Arabia, the Gulf states, that American power has a price tag. And that price tag is paid in energy markets, in inflation, in political capital, and in the erosion of dollar credibility. From a longer-term perspective, geopolitical risk is becoming a persistent feature of global markets, not merely episodic. Investors may need to price in a world where regional blocs and strategic competition permanently drive risk premiums and asset allocation. Read that again carefully. Permanently. This isn't a crisis you wait out. This is the new architecture. Let's go back to 1973. 1973, the Arab oil embargo. OPEC cuts supply. Oil quadruples in price in a matter of months. The US economy enters a decade-long stagflation spiral. The Bretton Woods gold standard had already collapsed in 1971. The dollar was being questioned. Nixon's solution? The petrodollar deal with Saudi Arabia. You sell oil in dollars, we protect you militarily. That deal gave the dollar its global reserve status for the next 50 years. Now look at this for the next 50 years. Now look at today. The 2026 Iran war has echoed the 1970s energy crisis through acute supply shortages, currency volatility, inflation, and heightened risks of stagflation and recession. But here's the critical difference from 1973. In 1973, there was no China offering an alternative payment system. There was no BRICS reserve currency proposal on the table. There was no digital yuan, no yuan-denominated oil contracts, and no yuan-denominated oil contracts, no alternative to the dollar infrastructure. Today, all of those exist. The question is not whether the petrodollar survives this war. The question is whether this war is the moment the world decides it's ready to test the alternatives. Let me bring this back to your kitchen table. If the Fed cannot raise rates aggressively because the economy is already slowing, then real inflation will continue to outpace your savings account. Your cash loses value while you hold it. Let me bring this back to your kitchen table. If the Fed cannot raise rates aggressively because the economy is already slowing, then real inflation will continue to outpace your savings account. Your cash loses value while you hold it. If energy prices remain structurally elevated, which they will even with a ceasefire because infrastructure damage takes months to repair, then every sector of the economy reprices upward. The IMF is explicit. The impact on emerging market economies will be UN News. If you're in Brazil, Mexico, India, Southeast Asia, you are not insulated from this. You are the most exposed. And here's the deepest irony of this entire situation. The people who feel this war the hardest, through food prices, fuel costs, currency depreciation, will never set foot near the Strait of Hormuz. They'll just feel it at the supermarket on a Tuesday afternoon. So, let's be precise about what we've learned today. Iran's strategic victory was never military. It was systemic. Force an energy shock, box in the Fed, accelerate dollar credibility questions, and demonstrate to the multipolar world that US hegemony has fractures. The system reached its strategic threshold. The escalation was not an accident. It was a logical outcome of incentive structures that have been building for a decade, and now the consequences are landing. Not in Tehran, not in Washington, but in your gas tank, your grocery bill, your retirement account. The people who understand this structure adapt. The people who only read headlines get surprised, every single time. If this analysis was useful to you, the next level of research goes deeper into what assets historically survive stagflation and which ones vanish with the empire.